So Swift is planning to launch a CBDC, so Central Bank Digital Currency Platform. So they're not exactly launching their own CBDC. They're letting a country do that. Their idea is they're trying to stay in the messaging game, if you really think about it, like they do for wires. They want to be that for the CBDCs. Will this be successful? In some cases, I'm sure. I mean, I can't imagine they're going to have no customers, but I don't see it being the standard. I actually see those systems, a CBDC, actually using other blockchains or other blockchain technologies that are more, I guess, open than what Swift may be doing. But we'll see.
Welcome to Wise Retirement Podcast, where we believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom today is my co-host, Robert Swarthout, founder, CEO, portfolio manager of Teton Crypto Capital. Hey, Robert.
Good morning.
So this is a big week here at Wiser. We have officially launched our digital asset models.
Yes. Congratulations.
Yeah. We dipped our toe, maybe just our small toe, into the crypto landscape. I'd say that right now, something around 17% of clients responded to they would like to have a digital asset component to their portfolio.
Yeah. Are they all calling each day to check on the value of their portfolio?
No, these are more longer term thinkers.
Yes.
And then in our video to our clients, we talked about, this is a 10-year focus, not tomorrow, but yeah, if you're in a 60-40 allocation, then you got about a 1% allocation. We chose the Bitwise Bitcoin ETF with the Fidelity one as the tax harvesting alternate.
Right. And
then if you had 100% equity, you go to 3%. And this is all across the board. It's not just the size of the portfolio doesn't matter.
Okay.
So, on our Flight Path platform, which is a automated investment service that uses low cost ETFs, in that space, I think someone's purchase was a fractional share, and it was like $5.
Yeah.
But I think on the highest side, as much as $60,000.
Wow.
Into a Bitcoin ETF.
That's very cool. The obviously it's just Bitcoin right now, so I guess you will dilute a 1% or dilute a 3% if something comes along?
That's a great question for our next investment committee meeting is what we do, because it's a digital asset model, but it only has one ETF.
One option.
Because that's all there is right now.
Yeah.
But yeah, it looks like we potentially have another
ETF coming down the pike.
ETF coming down with a different cryptocurrency, which I don't know if that's on our agenda today or not.
The very bottom. Yeah. So we'll get to that.
Don't want to spoil that, but yeah, thank you for your guidance and helping us learn all this.
Yeah.
And you're headed out, I guess, June 1st and 2nd with
Andrew. Yep.
Andrew, yeah.
Yeah, we're going out to the DAC FP conference in Austin. So it'd be a fun 2 days. I'm really curious obviously I'm not a financial advisor, but I'm going kind of with more of the ears of, or curiosity of what financial advisors are, how they're talking about crypto.
Yeah.
They're the gatekeepers in most cases. And if somebody potentially wants to invest in my fund, they are likely going to have to potentially be on board unless it's outside cash coming in. So it's like that, not necessarily trying to figure out how to market it or talk against a financial advisor, but just understanding how they're thinking about it is where I'm at.
And Andrew's going to be on stage with Rick Edelman talking about using cryptos inside portfolios.
Yeah, I look forward to asking the hard questions.
You'll be the first one on the Q&A.
Yeah.
How would you describe Bitcoin versus
really get in the weeds? Right. Everyone in the room rolls their eyes.
Well, that's good. You can report back. You can video that for us, and we can either use it for him or against him.
There you go. Yeah.
All right. Well, let's dive into our agenda today. Everything that we've been talking about for the last couple of years as we do these crypto editions has been, what's the adoption? How is this being used?
Or what's it going to look like? Most cases it's more dreaming.
It started, a lot of it, you can see the blueprint kind of taking shape. And I think this first topic with Swift planning to launch its own CBDC First of all, let's stop for a second. So what is SWIFT?
Yeah.
So we can't have global commerce without SWIFT right now.
Correct. It's an integral system. It's been around since the 70s. So SWIFT, admittedly, is an acronym that I don't know what it stands for, right. But everyone refers to it as SWIFT. So like I mentioned, it's built in the 70s, and it allows the communication, the important word there is communication, to allow banks to communicate to, if you want to send, whether it's dollars or any other currency overseas. There's this whole underpinning called the correspondent banking model. So it allows banks to have these bi-relational relationships and debiting and crediting accounts effectively.
Right.
That are in the bank's name, so then you can get the money that is wired to, say, Europe or wherever you're sending it. It's an old system, built in the 70s, not terribly updated since then. And like I mentioned a second ago, is a communication standard. It actually does not deal with the settlement, the movement of the money. It's just literally sending, you can think of it as emails. I mean, it's not exactly emails, but you can think of it as emails saying, hey, debit this account or credit this account.
SWIFT stands for Society of Worldwide Interbank Financial Telecommunications.
Yes.
Yeah. There'll be a quiz on this later.
Yes. And I'll fail it again. And it's owned by banks. I think it's owned by like 50 or 60 different banks. It's a bit of a co-op of sorts.
So they can securely transmit information.
Correct.
Is the idea.
Well, and the idea is secure, but there's been periods in the past where you hear about banks getting hacked and money getting stolen because SWIFT wasn't secure. Whether they've fixed those problems or not, I don't know, but it's an old system.
They have 11,000 banks
banks
in 200 countries. So pretty much if you're moving money.
Yes, but I think 50 or 60 banks own it versus the other members. And the ones that own it don't want to see it change. And the ones, the other 10,900 and change would love to see it change. Because a lot of times if you're sending a wire from, say, your small community bank, and you're sending it overseas, it's going to get routed from your small community bank potentially to a regional, and then there's basically 3 banks in the U.S. that are basically the exit points.
Yeah.
And then it goes overseas and makes multiple hops. Wire transfers can take days.
Guess. Wells Fargo, Bank of America, and JP Morgan.
I don't think Wells. I think it's JP, BOA, and Citi, I believe.
Oh, I forgot about Bank of America and Citi. Yeah, Citi's actually a global bank in and of itself.
Yes. Yeah, but so those guys don't terribly want to see it change. And then you have, whatever's happening overseas. There's fees along the way. Wire transfers are expensive.
And they actually take more than a day. You can't go down to your
yes.
bank and wire money internationally and be there that evening like you can domestically.
Correct. And, a lot of times people may confuse the idea of a wire that's domestic. That's on FedWire. That stays within the U.S. rails.
Right.
And that can happen within hours. But if it's an international wire, it's certainly on SWIFT, and it can take some time. Potentially 5 to 7 days, depending on where it's going.
Yeah.
There's a 6% error rate. Money just goes missing.
Wow. That's high.
That is insane.
For having practiced doing this since the 70s?
Right. So, there's a lot of evolution, and a blockchain has a lot of promise there. So kind of circling back to why we're talking about this. So SWIFT is planning to launch a CBDC, so Central Bank Digital Currency Platform. So they're not exactly launching their own CBDC. They're letting a country do that. Their idea is they're trying to stay in the messaging game, if you really think about it, like they do for wires. They want to be that for the CBDCs. Will this be successful? In some cases, I'm sure. I mean, I can't imagine they're going to have no customers, but I don't see it being the standard. I actually see those systems, a CBDC, actually using other blockchains or other blockchain technologies that are more, I guess, open than what Swift may be doing. But we'll see. It's fascinating.
I mean, and the whole point of cryptocurrency in the blockchain is that you can just avoid this whole system to begin with. So why would you want to use their platform?
Well, you think about it. They have the salespeople. They have the connections. They have the banks are, if you think of it this way, they're comfortable with Swift.
True.
Or at least they understand the beast that they're working with.
Right.
But at the end of the day, there's certainly going to be banks that are going to take the leap and go all blockchain. Maybe the smaller banks or maybe even bigger banks. I mean, heck, JP Morgan's doing a lot of stuff with his Bitcoin ETFs. And behind the scenes, I know that, they're doing things. They're testing Ethereum. They have their own version of Ethereum that they run internally. So, I just can't wait to I wish I could jump in a time machine, just fast forward. Not because I just want to skip all the stuff in between. I'm just really curious where all this lands.
Right.
And would like to kind of short circuit it of sorts. So
tell me about SAB 121. What is this?
Oh boy, this is the hot topic of the last 2 or 3 weeks, but last week it came to a surprising vote. So all of Congress, so the House and the Senate, both passed it. And so SAB 121 is Staff Accounting Bulletin. So it came from the SEC. And 121 is just, they just have subsequent numbers there. It basically says if a bank was going to custody crypto, they have to, if you think about it this way, double account for it on its balance sheet as a liability. They're basically, this came down, in my opinion, from the bank regulators that are controlled right now by the Democrats, or namely Elizabeth Warren, who hates crypto. And it was by trying to make it where it wasn't illegal to do business with crypto, but no bank had interest in doing it because they had to keep double assets on hand to kind of account for it. This was in place, I want to say, for roughly a year, something like that. Mm-hmm. And it hasn't been just Republicans, but the Republicans for the most time have been like, this is crazy, this doesn't need to happen. But as it's kind of come through, some banks recently, like my fund, we just got debanked in the last month. Got a 30-day letter saying Customers Bank is no longer doing crypto customers. Like, that's a pain because there's not tons of banks that are willing to touch crypto, and partially because of this.
Because of the 121.
So it's just interesting timing, right? Like, I got my letter on April the 30th, and they voted on this last week. So it's close timing. I don't think it has exactly to do with it, but this doesn't help.
Right.
So even though in our case, the bank is not custodying any crypto, it is purely an operating account for cash to pay bills. That's all it is.
Yeah.
But they're like,
because you're a crypto business, they're worried about liability.
But in this case, the liability that they're having as the regulators, which wasn't part of SAB 121, is regulators are now requiring the banks to do KYC and AML on any investors in a fund. So they have to crawl down into the entity and do that. Versus before, they could have taken a qualified, like our fund admin does all that for us. They could have taken their word that had been happened. But now the bank has to go do that themselves. So obviously there's a lot more cost and ongoing cost. So I think that I view this as a storm that's blowing over crypto right now. I don't think this is the way it's always going to be. So we'll see. So the SAB 121 was passed, like I mentioned, by both the House and the Senate. And it passed with Democrats voting for it. And some big name Democrats on top of that. So that's what really caught.
You're talking about the repeal of it now.
The voting for the repeal. It has to be signed by the president. It's
Which he says he's not going to sign.
He says he's not going to sign it. But I am willing to go out on a limb here and say he's going to sign it because you had enough big name Democrats that were for the repeal of it. And the reason why is you start to look at what's the election going to look like in November, and the numbers that I've seen floating around, there's 15 million people that own crypto. Is crypto going to be that are deciding, or the way they decide who they vote for? Probably not, but it certainly could be. It could sway some people.
Right.
And if you kind of flip it around and be like, okay, am I a voter trying to figure out who I'm going to vote for? And Biden is anti-crypto, I'm going to vote for him. That person doesn't exist.
Right.
I mean, that you could count those people in the country on one hand, probably.
Right.
But 15 million people on the other side could potentially be in a tight election, could be swing some states. So the idea is that the Democrats have finally come around to kind of, maybe clean up some house here prior to the election. So I was just happy to see it passed. I think Biden will end up signing it, and this should have never happened in the first place. It should have not been in place, and this is a big cleaning up the mess that was crypto. And this admittedly came out of the FTX mess. Is after that, and trying to keep banks away from the scary world of crypto because crypto could take down the financial system. The narrative that we heard for a while, which is totally BS.
Well, along with the news of all this was a lot of criticism toward our SEC chair.
Correct. Well, he's been very anti-crypto,
and so that seemed a little bipartisan to me, in the narrative of it.
Yeah,
so and that might be why they would put Biden on the defensive, possibly, is because they didn't just pass it. They passed it and said, your guy's an idiot.
Right. Well, and there's been some narrative going around for a while, I would say 6-9 months, that Gensler has made himself a political liability to Biden because he's been so off the reservation when it comes to any sensible thing around crypto.
Right.
And that's in some ways been good for crypto because it's kind of rallied everyone together. Crypto can be a lot of infighting, but like there's one North Star here, and it is defeating the beast that is Gensler, the SEC, and I guess Elizabeth Warren, his counterpart.
Right. So. That's funny. All right. So let's talk about the Swiss National Bank tokenizing legacy bonds. So basically, when you tokenize something, that means that everyone can buy a piece of it.
Right. And you can buy very small fractions of it. Yep. I just put this on here more of just like showing that it's not just happening in America, it's happening other places. The Swiss National Bank, everyone has their opinion about the Swiss banking system, but it's a big deal when you start to see these, in my opinion, these entrenched European banks or countries in the banking system start to do stuff with blockchain. You're going to see more of it. There's certainly a lot of projects that are going on. But
now, are they buying that through their through local currency through tokenization, or are they actually using crypto?
I don't think that? No, they're just purely tokenizing a blockchain right now. Yeah. So
you can do a blockchain without having to do a cryptocurrency, basically.
Absolutely.
Yeah.
Yeah. So at the end of the day, the blockchain is just a different form of a database, and it is a public ledger, so it's more transparent. So you're going to see crossover, but I wouldn't say we're too far away from a world where, if you own some of these tokenized bonds and, off this exchange SDX, that you could literally take some crypto, probably a couple of years away, and be able to buy into it, whether it's stablecoin or actual real crypto. So.
Are you curious why annuities keep coming up as a potential investment option? People are often told that annuities can effectively mitigate investment risks and help secure their financial future. However, annuities often benefit the salesperson and might not be the best choice for you as a consumer. To learn more about the various types of annuities, the negatives of owning them, and better investment alternatives, we have a free ebook on our website just for you. To download our ebook, Buyer Beware, Why Do They Keep Trying to Sell You That Annuity? Simply click the link in the episode notes or visit wiserinvestor.com/guides. Now let's get back to the episode.
So let's talk about BlackRock investing $47 million into Securitize, but let's talk about who is Securitize first.
Yeah. So Securitize is an Atlanta-based company, a startup. I don't know, they're a couple rounds into being a startup at this point, so a more established company, but they are a company that helps issuers to use a blockchain platform to tokenize things. It's one of the couple things that they do as a business. So when we were just talking about the Swiss National Bank using a platform to tokenize bonds, I don't think that I know that they didn't use Securitize in this case, but like Securitize offers a product to help an issuer tokenize an asset of some kind. Or security on a blockchain.
Basically, it's the on-ramp to tokenization.
Correct. You can think of it as taking a paper stock certificate and digitizing it on a blockchain. That's not exactly the process.
Maybe I should take a Wiser stock.
You could, and then you have an initial coin offering, and the SEC would like to talk to you about 5 minutes ago. And that was so 2017 of you, by the way. So we joke, but it's it's cool to see the Atlanta-based company kind of in the mix here. And Securitize is one of the leaders in this space, at least from the product that they're offering. But as somebody that may have been an investor in Securitize or the executive team, BlackRock stamp of approval probably is a big pat on the back there. And I don't know how much of that $47 million was BlackRock's contribution.
Yeah,
but BlackRock has been making moves in this whole space since the ETF launch. A lot of tokenization stuff. Because they had tokenized some stuff recently on a platform that uses Hedera, a different blockchain. So they're trying a lot of different things.
All their ESG stuff has failed flat on its face. So I guess maybe they're thinking more forward now.
Yeah, well, or they need to keep those salespeople busy selling something else.
Right.
Which I guess in this case I'm all for.
Right.
It depends on what side of the fence you're on here, but so it's just like I said, it's cool to see it, and you're going to see a lot more of this going forward, whether it's Securitize or other companies. So,
how many years did Sam Bankman-Fried get in prison? 25?
Something like that. Yeah, I forget the exact number. Not enough. I remember being grumpy that day.
Yeah, I know. You were like, oh my gosh, this guy should have been parked away for a lot longer. I think that CZ should have gotten a heck of a lot more than 4 years.
No, 4 months.
Or I'm sorry, 4 months.
Yeah.
Yeah.
So
okay. So SBF, I don't think anybody died.
Correct.
They got all their money back, but not really.
Yeah.
Because the crypto just went up in value.
It went up 4 times, but they're getting back 120%.
Technically, you got back your principal plus more, right?
Yeah.
Where CZ is funding money to the bad guys who are killing Americans.
Yes, that's definitely one lens to look at it through.
Not directly. He wasn't a direct contributor, but he was the highway to death.
I guess I'll be the
and he gets 4 months.
I'll be the yin to your yang here. So SBF stole money. Okay.
Well, yeah.
They stole a lot of money. CZ did not. Okay.
No,
but he definitely didn't do good for the world. We probably can agree on that. No. And I'm not trying to defend either one of these guys.
SBF just had some accounting issues. I don't actually believe that, just for the record.
Yes. Listen, you can tell one of them worked with the government, the other one did not. And
wait a minute, SBF funded a ton of political campaigns.
Right. Well, that's why he got those charges dropped. The political
he got those charges dropped because they realized they'd all be guilty.
Right. 80% of Congress received some money from him.
Right, exactly.
Which if we got rid of 80% of Congress, that might have been a great reset.
Right.
But that might have been a rough issue for the country.
Fire everybody and have reapply.
We have an emergency election next Tuesday. But yeah, CZ, low security or minimum security type situation.
Money to Iran.
Yes. Listen, I really think it came down to he must have him quote unquote stepping down. That's debatable because his wife, girlfriend, whatever she is, still is a high level executive there.
Right. Right.
But I don't know. It just comes down to, well, here's my conspiracy theory. Is there was some form of U.S. Probably CIA type represented companies running money through Binance to fund other stuff. And you take 4 months. We won't talk about that. We know you were doing bad. We all just kind of get to put this thing to bed type situation. I have no basis for that, but the CIA likes to do that kind of stuff and run with their shell companies. And crypto has been a.
But wouldn't you be able to flip that around and say, you put me in jail for 4 months and I'm going to talk about
that's how it got negotiated down from years to months. That would be my guess.
From 25 years to 4 months.
Right. I mean, but it's easy to try to compare CZ and SBF, but because they were functionally dueling for a while, right? Between the two exchanges on Twitter, the two of them and that kind of stuff.
It was like two evil doers. It's
but I forget if I've mentioned this in the podcast. There's certainly a theory, and it's probably relatively well founded, that crypto needed the phase that it went through, that CZ and SBF did what they did, to in some ways
clean out things.
Well, the clean out was the back end of it. The front end of it was getting people in the space, getting people interested, all those things, right? Showing the promise, all the things that was crypto or is crypto. In some ways they were marketing, but in a dark light, right?
All these guys are walking around with hoodies and just wearing gym shorts everywhere and all that stuff, and then we had I noticed that. I don't think anybody else noticed this, but all of a sudden you look at all the Facebook era guys. They're not wearing hoodies anymore. They're all dressed up now.
Yes.
Because I think they realize that, we're not
we're not going to associate that.
We're not going to associate with that crowd anymore. We're going to start wearing all the latest designer clothing.
What always comes to memory for me when I'm thinking about the clothing of that era of crypto is Sam Bankman-Fried was on stage with Bill Clinton and someone else at the World Economic Forum. Bill and the other guy, suit and tie. Sam, gym shorts and a t-shirt and tennis shoes. And I'm like, you contrasting these worlds. And Sam was there talking about his whole like altruistic mentality where he was giving away all his customers money at the time, but no one really knew. Right. And I was just like, this world, two different worlds are colliding here like so fast. So anyways, we digress.
All right. So DTCC no longer allows crypto or crypto ETFs to be used as collateral.
Yeah. Would you like to explain what DTCC is?
No.
Okay. I'll try. Okay. So it's another acronym. It's basically the settlement of all stocks and bond transactions in the United States, and different derivatives. They came out with literally a letter, and it was short.
Depository Trust and Clearing Corporation.
Yes. So something that if you've ever traded stock, you've used, but you never knew it.
Very true. And it's been changing too. It used to take 3 days to settle something. Now it takes one to settle.
Yeah. And I think they're heading to zero, if I'm not mistaken.
Yeah. Working that direction.
And we can talk about that in a second. We didn't make it on our notes, but I think it's important. So what we're talking about here is they're no longer allowing crypto to be used as collateral. Think of it as margin loan in your account. They came out and said crypto can no longer be used. It's counted at basically as zero. This seems more like a regulator. I don't know if they got pressure from the regulators. That'd be my guess.
My guess is that it's the volatility, because you could have severe margin calls very, very fast. And so if the world starts falling apart, so if the S&P is down 20% over a month, and then crypto's down 50,
well, 50% over a week,
right?
Yeah.
So then you run into all kinds of issues. So I think it's probably just to maintain stability of the system. Yeah, doesn't make crypto bad.
I'm sure that's what they will describe it as. Like, to me, it's like, we've got to work all this stuff out. Like, we can't just like start ignoring it.
True.
They could have said crypto accounts for 50. You can keep it at 50 cents on the dollar. Like, they could have done something. Zero is not
25%.
Zero is not a good answer for me.
I mean, they do the same thing. Certain institutions will do the same thing with, like, I had a client doing. I wanted to see how much they could borrow to build a house. Mm-hmm. And then pay it back if they sold their old house.
Yeah.
And they had a very high concentration in Home Depot stock. They would let them go 75% margin. Now, this is not the DTCC doing
right.
this.
It was some brokerage.
They would let them go 75% margin on Home Depot stock, where like the S&P 500 is the standard 50% margin, which I thought was interesting.
Interesting. Yeah. At the end of the day, again, they could have done something greater than zero, but it reeks to me of regulator pressure somewhere,
or ignorance.
No,
they just don't know.
No, I tend to think a lot of these people are smart. And
you can be smart, but you can also still be like, I'm not watching these DVDs. I'm watching my VHS.
Yeah, but I mean, fair. The DTCC is a large organization. I know that they're doing some stuff where they're trying to do 24/7 trading, and we can kind of that's the thing we alluded to a second ago. Like, to me, when I read that headline, I'm like, oh, duh, because it's going to be tokenized. Like, why do right. But like, they didn't say that.
True.
And there's no, I guess, public evidence of that. But like, I know that they've done research around trying to tokenize basically the U.S. stock markets.
Right.
And the NYSE is the one looking more specifically at 24/7 trading. And it's going to happen. It'll be there. Andres and I were recently talking about this, and how the idea that there's 24/7 trading totally changes the news cycle, or potential news cycle. There's no longer, I'm going to have anything bad, I'm going to do a press release on Friday at 5 p.m. when the market's closed and it goes away over the weekend. No. Or like, you kind of get some hours to sleep now. I mean, in the crypto land, it's 24/7. If you're an active crypto trader, I don't know how you sleep. You must have good risk controls, or you're being rather risky. So, I don't know. It's just fascinating to kind of see these things get worked out. And, I would imagine at some point, even the Bitcoin ETFs, they're saying, cannot be used as collateral. So
correct.
This will come back to something greater than zero at some point, and we will act like it never happened.
Right. Speaking of ETFs, so,
yes.
We just, January 5th of this year, we launched the Bitcoin ETFs. There were, 6 of them, 7 of them? 6 now.
I think it was 9.
Or is it 9?
9 plus Grayscale.
So now it looks like Ethereum.
Yeah. So prior to even the Bitcoin one launching, there was some applications for the Ethereum, but everyone kind of understood that Bitcoin was going to be first out of the gate, whenever that was. Right. Obviously, that happened in January. And then all of a sudden, people felt like they had the playbook on how to get one of these things launched. You had to have a futures one in place first, and then you could get the more spot one.
Correct.
There's an Ether futures already in place now. So this whole thing has been happening. So, yeah,
I thought we were still debating on whether or not this is
a security. Yeah, but guess what? When it's an ETF, it is a security, so it kind of doesn't matter.
But are there like pending lawsuits?
There's Wells notices going around saying there might be a lawsuit.
So that lawsuit, it would.
But again, I don't think it matters in this case because once you wrap it in ETF, it is a security. So what difference does it make? The price may change, but the underlying asset probably doesn't really matter.
How does the SEC see Bitcoin? Does it see it as a
commodity?
Commodity. So does it get taxed as commodity?
I don't think that it does. I think it gets long and short-term capital gains treatment.
Yeah, that's my understanding.
Yeah, I know that's the case. Yeah.
Okay. But even though commodities don't, so if you're trading in oil or
correct
pork bellies,
this is kind of like maybe we need a new definition of what a crypto asset is, or regulation.
I've said that about ETFs for years. It should be called exchange traded products.
Well, that's what it is in Europe.
It is,
right? Yeah.
Correct.
ETPs, yeah.
Yeah, they were a little more ahead of their time back in the day.
Yeah,
than we were.
So kind of getting back on this ETF thing with ETH, there's the whole process of filing for something with the SEC is they have so many days or weeks or months to respond. There's May the 23rd. So we're recording this on May the 22nd. So tomorrow there's one of these dates kind of where there's different applicants that are due to have a response from the SEC.
Right.
In the Bitcoin, the lead up to the Bitcoin, there was a couple of these dates that happened. The can got kicked down the road. The SEC denied it. Sometimes they would give answers, but other times they just kick in the can. There's been radio silence on this topic for the last month and a half. Everyone's like, less than 25% chance we're getting them on the 23rd or the approval of them. And partially because the SEC has never said officially ever never said that Ethereum is a commodity or security.
Right.
Well, so you had the SOB, and kind of pulling things together, what we've talked about here. You had the SOB 121 vote last week. Late last week, over the weekend, you started hearing rumblings that maybe the SEC is going to approve, or is actually starting to have dialogue, more specifically, with the different applicants. Like all of a sudden, everybody's in panic mode, hands on fire type situation, because the SEC, everyone assumed it was going to be denial or a temporary denial for this round of timing, and the SEC has been having conversations about filing different things. It doesn't sound like the ETFs, which we've talked a little bit about this, the ETFs with Ethereum are going to allow to have staking in them. This version of them. Maybe there's new versions that can. So they're having to pull different things out, update their documents. And everyone's now in like panic mode, trying to get it all done on time because everyone wants to be first out the gate. So I forget how to say his last name, but Eric, the guy that works at Bloomberg that does ETF analysis.
Oh, yeah.
And he went from thinking that we had a 25% chance of this happening to, he said, greater than 75% chance on. He literally said that yesterday or the day before. So huge swing. Yeah. And crypto all of a sudden started running up, popping. Like, at the end of the day, there'll be an Ethereum ETF at some point, probably relatively soon, be my guess. He thinks within the next 2 weeks they're going to be approved.
So how would you play that? You have those are the two dominating cryptocurrencies, digital assets.
By market cap,
by market cap. And there's a lot of, if you do by market cap, there's some things in there that I don't think have legs, but
correct.
How would you split that? Would you do like 75-25, Bitcoin being your largest, Ethereum being?
I mean, you could follow the ratio between those two. Just look at the market caps, add them up. And my guess it's 75-25, 70-30. It's not 60-40.
What people don't realize is everyone talks about Bitcoin, but everything runs on Ethereum.
Yeah. So that is true in the sense that smart contracts, that's the most dominant network by, and it's certainly the one with the next biggest brand recognition, Bitcoin, then Ethereum. Then you have others. In some cases, Doge may have a better brand recognition depending on which part of the public you talk to.
Right.
That being a meme coin, we're not going to talk about that now, but it's it's just interesting to kind of see it. I would, 80-20 75-25. Yeah, somewhere in there. I would probably look more towards the representation of the market caps. Yeah. To kind of give some guidance there, because the market is speaking at some level there, right? Like by bidding them to the prices they're at.
True.
So why is this happening? Why is the Ethereum one all of a sudden running? And we have kind of mentioned it briefly, but the SOB 121 vote, I think, is really what put the pressure on here, on Gensler in particular. Yeah. Because Gensler would love to see this stuff go away. He would never want to approve it. But I think Congress, by speaking up and saying, we have this opinion that the SEC did this wrong, and then all of a sudden, how far did that pressure run up the chain? Did it go to Elizabeth Warren? Did it go to the president? All that kind of stuff.
Right.
You could figure some opinion there, but at the end of the day, I think that it's just crazy to see how much pressure the crypto community has been able to put. There's the super PAC that they've funded, like $80 million or something, a big number.
Right.
I'm proud of the community in some sense, because it's growing up and it's starting to play the games that Congress is used to playing to try to get some attention and get things done. So we'll see. I think by the time we, I don't know, I'll probably put 80% odds on the time that we do this next podcast a month from now that we will have very clear answer on an ETF, if not one launched. So
that would be very fast, and I think it would catch a lot of people off guard.
Yeah, and that's so far that's what happened. That's the narrative on this. Is I remember texting you, and I was like, he's going to be shocked by this.
Right. I was like, crap. We just decided to do the Bitcoin one. How am I supposed to go reevaluate this now?
Well, this gives you another opportunity to talk to your customer. Right. We have found another option.
Yeah. Well, honestly, I think when you opt into a digital asset portfolio, it would be less complicated this go around. But yes.
And at the end of the day, I mean, you guys get to figure out what the mix is going to be between these two and kind of just go adjust portfolios. I admittedly, I think the real question for you all to decide is, do you do it as soon as you can, or do you wait for kind of this? Because Bitcoin sold off rather quickly when the ETFs launched for a week.
Yeah, it did.
And then it kind of ran up. Are we going to see a similar pattern, or do you just want to kind of wait a couple months and just kind of let the dust settle?
The sell-off in Bitcoin didn't make a whole lot of sense to me, because you look at the volume that was buying it.
Correct.
It was
the sell pressure from the grayscale, because so many people wanted out of the trust.
I can see that.
And you had different people that were in bankruptcy, that held the grayscale, that were trying to get out of it. So there was a lot of pressures there that the Ethereum will not have, not have at all. And admittedly, also, I think there's going to be less general volume in.
I was about to say is Ethereum has to be explained. I think everybody knows what Bitcoin is. They don't know. They don't know what it is, but they know the name.
Ethereum may just benefit from the general idea that it is a diversification out of Bitcoin, but you want to stay in the crypto market.
Yeah.
Because it literally is the second one. So
true.
But does that hold long term? I don't know. Ethereum is definitely not going away tomorrow. It's got some issues it needs to work through as a network, but it's number 2 for a reason. So
yeah. Okay. We've got some other episodes you might be interested in. Episode 20 or 216. This is episode 226, which is crazy. What are alternate investments? Should you be invested in them? We talk about Bitcoin there a little bit. Is Bitcoin more than digital gold? Episode 220. We've also linked directly to Robert's website if you want to learn more about him and his project. Thanks for listening to today's episode. If you're interested to learn more about Wiser Wealth Management, you can always schedule a consultation with us by clicking in the link below in the show notes, or finding us at wiserinvestor.com. Thanks for listening. We'll see you guys.
Take care.
Thanks, Robert.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This episode was produced by Rachel Dotson. This podcast is strictly for informational purposes only and is not to be considered as investment advice or solicitation to buy or sell any financial products, securities, digital assets, or any other investment vehicles, or a basis to make any financial decisions. Wiser Wealth Management Incorporated is a registered investor advisor with the SEC. The host and/or guests may personally own securities, digital assets, or other investment vehicles mentioned on this podcast. Neither the host nor guests of the show are compensated for their participation, and no referral fees are paid to or received by any host or guest for clients, listeners, or similar interests. Investments involve risk, and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor, tax professional, insurance professional, and/or legal professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.